Joining us now for more on this is Ross Gerber, President, CEO, co-founder of Gerber Kawasaki Wealth Management and Investment Management. He invests in Tesla and currently owns 262,000 shares. Are you buying on the dip?
No, I'm not buying on the dip. You know, unfortunately, I wish I could tell you Tesla was cheap, but at 110 times earnings, it's still the most expensive stock of the Mag 7 and in the entire S&P by my standards of any large cap. So, you know, this is the problem that Tesla has, is if you compare its valuation to companies like Nvidia or Microsoft, Tesla could go much lower than it is today, and that's what we're worried about.
I mean, Tesla's investor base is pretty varied. You have institutional investors, you have retail investors, then you have a lot of folks who just like Elon Musk. Are people rooting for Doge to hit a bit of a speed bump here so that Elon can then return to Tesla and steer the company back on course?
Well, I was just having this discussion with two of my great clients who are just massive Tesla lovers, and a huge amount of their assets they had put into Tesla early and made a lot of money and still have a ton of Tesla stock. And we were talking about this exact issue, which is if Elon came back to Tesla, that would be great. You know, that's exactly what Tesla needs, but he's not. And he's going to stay at Dodge, and he's one of the most powerful people in the world now, and it's definitely gotten to his head. And I just don't see him changing and going back. I actually think he's completely neglecting Tesla at this point.
So that raises another interesting issue, which is, do they have a succession plan there? I'm not saying he's going to leave Tesla, but does he have people to mind the store while he's gone?
Well, this is exactly why I'm upset, because all the people that were minding the store from 2 years ago got fired. And there's a whole new team of people running Tesla at this critical period of time. And so he's made himself indispensable for Tesla. The team before, with Drew and Zach and Martin, you know, they easily could have been running Tesla and doing a great job. And if anything, I think Elon should appoint a new CEO to run Tesla so that he can just focus on what he's doing in the government and also separate himself from Tesla, which is this great company that's trying to solve climate change, is now associated with Elon in such a negative fashion that it's destroying the sales of their main product, which is selling EVs. So, you know, something's got to change, and I think it's going to happen this year.
Okay, Ross, so there's a couple things. One, obviously, is the Musk effect, and this time to the downside. And then the other is the overvaluation, which we talked about. But then the third is the actual sales in China, in the U.S., and in general. And we saw an RBC analyst lowering his price target today, saying lower estimates for the pricing of its, say, full self-driving technology, which is what was supposed to be a catalyst for that stock. How much of it's just fundamental?
Well, that's what I'm saying. I think a lot of it's fundamental. You know, we can get into all the emotional reasons why Tesla isn't doing well, and then you can look at how these emotional reasons actually affect the actual sales and profits of the company, because it is now, and then how that extrapolates out into the valuation at 110 times earnings. Maybe at some point investors aren't going to give this huge premium based off all the potential of Elon Musk with robots and CADs and all this kind of stuff, and all of a sudden take this company back to earth. Because honestly, after watching the Nvidia presentation, you say, well, Nvidia is definitely the best company in the world, and so it trades at 40 times earnings today. I can buy Nvidia with 75% earnings growth at 40 times earnings. This is the cheapest of the Mag 7 or the big caps or the tech companies, and it's growing the fastest. So, you know, it seems absurd that Tesla would have 2 to 3 times the valuation of Nvidia when there's so many things going wrong. And that's what we're worried about, that the fundamental story comes back to reality, and that could be very costly to current Tesla shareholders.
Yeah, no, sorry, we got confused on who was going to ask you the next question. So, Ross, I totally hear you on that. What would stabilize it, aside from Musk coming back? Fundamentally, what would stabilize it?
Well, the most important thing with any company is earnings and earnings growth and the certainty of that earnings growth. So certainly, if you want the stock to stabilize, you've got to have sales not continuing to go down. You know, so sales and profits going down is definitely not going to stabilize the stock. So then you can ask yourself the question, how can we get Tesla sales to increase? Well, they have a new model out, they have a new truck out, they have the best products in their industry, the best software in their industry, the best products. Like, how can sales be going down? What should we do to rectify that situation? And why is it happening? And we know exactly why it's happening. And there are many solutions to rectify it. But Tesla isn't run by the board of directors. It's run by Elon Musk. And so it's just not going to happen.
Right. There's no urgency because he's not feeling particularly urgent about it.
He just doesn't care.
That's another way of putting it.
Well, he cared enough, though, for President Trump to buy a Tesla, so...
Yeah, does that matter, Ross?
He cared enough to get Trump to try to shill some Teslas, but I don't know if that helped at all, and then he didn't pick a Cybertruck. You know, it's super lame.
Okay, so not only should he have gotten a red Tesla, but maybe a Cybertruck as well.
No, he should have picked the Cybertruck. Like, come on. Trump picks an old Model S. Guy doesn't even drive. And the other thing is, if you're going to do a sales event, at least get a guy who drives, you know?
All right, all good points, and maybe it's something that they can consider for the next time around.
Well, I hope MAGA
this.
buys a lot of Teslas. They got to buy about 100,000 more Teslas this quarter to make the quarter.
All right, that's a good number.
Go out and buy a car, MAGA. Go out.
That's a good number to keep in mind. So, Ross, as you look at the Mag 7, and Alex started us off by saying that Meta is the last Mag 7 name to turn negative for the year. Which of the 7 names are worth buying right now on the dip?
Well, I did buy some Meta in my fund GK this week, and I just opened a position during the correction because Meta has come down to a much more reasonable valuation at 25 times forward earnings. And although their earnings growth isn't expected to grow much this year, I think that they've kind of guided down enough. And I think that, and I don't like Meta actually, but I've gotten to the point with their AI and what they're building and their domination and the position they have in the world is pretty dominant now, and their profits are really flowing. So we added at Meta, to the portfolio recently, and I think it's a good stock to own.